You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling Options Insider Radio Network. Glad to see so many of you are enjoying it on all your legion of on-demand platforms. Literally, another one hit me up this morning. I don't understand how there are still more podcast platforms that are A, launching in 2021, and B, don't have our stuff yet, but somehow there are. So if you have a hard time finding a platform with this kind, I don't know what, you're not trying hard enough. It's on literally everything under the sun right now. Of course, if you want to go above and beyond, get some great exclusive content, like, of course, Options Oddities coming up later today. You got to join our secret club. You got to learn more. theoptionsinsider.com/pro is the place to go to learn more about that. And of course, however you listen live after the fact, keep hitting us up, those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from today. First, let's go out to the dark and stormy shores of Maine, where we are joined once again from the GIOVINAZZI compound, dark and foreboding as it may be, by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program. How go the dark and stormy shores, sir?
They're a little darker and a little stormier today, I have to say. But things are going. Mr. Sebastian is a little under the weather. He's recovering from a little strep throat.
Uh-oh. You know what that means in this day and age. Rush him to the hospital. Rush him to the ER.
Yeah. I think he's gotten the shot, but he's gotten the shot already, but his kid's back in school, so I don't know. Yeah. Of course, my theory. Everybody's going to get it.
Once you have school-age kids, you're getting something. Strep is probably the least of your worries. Kids are literally the vector for all disease in life. Never been sicker than when my little dude was even littler and going off to like kindergarten and stuff. They just bring the plague with them. wherever they go. And hopefully he's not bringing any plague, at least virtually today. Let's go find out. Let's head on out to the MIAX hot seat. We are joined once again by Mr. Tom JARCK, formerly the volatility product specialist. Now he's just kind of the all things vol major domo over there at MIAX. Tom, welcome back to Volatility View, sir. It has been too long.
Thank you, Mark. Hi, Andrew, and everybody. Yeah, excited to be back on. But I got to admit, I almost canceled last minute because I had to run an errand earlier. I live by the beach, a town called Seabright. So I ran over there to do a quick thing, and I took a walk over to the beach to take a look. And there must have been a couple hundred, sunbathers out there. So it's pretty nice down here. I'm sorry to hear that it's not so nice up north, but the beach is amazing. The weather's great. So it's a little tough being back inside on a Friday, but happy to be here and look forward to a good show.
We'll see if we can make it worth your while as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we break down the week that was and indeed still is, from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives across the broad spectrum of products, easy for me to say, that you folks love to trade out there. And coming into showtime, we are seeing a somewhat robust end to the week. The week kind of started off kind of middling. The markets seemed like they had a hard time finding their direction. And then the latter portion of the week, they've been kicking into high gear, green, pretty much dominating the screens out there as we have kicked off earnings season yet again. Everyone's been waiting with bated breath to see how this new season would play out from a vol perspective. We are starting to get some new numbers coming in for the brand new season, just hot off the presses there from our friends over there at ORATS. We'll get to some of those probably a little bit later in the show, but in general, it seems like the market's liking what it's hearing, at least so far out there. Most of the major indices firmly in the green yet again today. S&P, once again, the Goldilocks, so the orders are a bit reversed. Usually it's NASDAQ leading the charts. This time it's the Dow. Dow up nearly 0.9% out there. S&P kind of the laggard, only up about 0.2%. And the NASDAQ is in the rearview mirror, up right about 0.4% or so. So a bit of a reversal of what we usually see out there. Of course, all this continued spree of green means vol has just imploded since our last show. Spikes come into showtime was shy of the 15 half handles, actually about a 15.40. Puts it down over 3.5 handles, about 3.6 points from where it was this time last week. VIX Cash come into showtime was hovering around a 16. That puts it down about 2.5 points from where it was this time last week. So everyone out there who had the great vol implosion in their crystal ball pick, well done to you. I'll have to go look a little later to see how many of you folks were in the ballpark this week. This was a fun one. And VVIX, of course, 106.5. That's down about a point from where it was last show after spiking up to about 120, which was the former floor during the pandemic. For the lion's share of the pandemic period, we really didn't get below 120. And these days now we get up there a little bit, then we come roaring right back down to these levels, right around the 105 or so level out there. We're back around there yet again, 106.5 coming into showtime. So a lot to unpack. An interesting week. Mr. Tom, you haven't been on in a while, so we shall start with you, sir. When you're not being lured away to go sunbathing on the beach, sir, what has been catching your eye out there, sir?
Well, I think the big thing for me is that I haven't really been focusing on a day-to-day, tick-by-tick basis, but it's just the big reversal over the last month, especially on the Skew side. For the mainly looking at the SPX and spiders, that's been a pretty big reversal. And I feel like every time I've been on the show all year, we've been talking about all-time highs in Skew and just how high it was. And this recent retracement is pretty interesting to me. I think things normalize so quickly, and I do think the volatility indexes, spikes and VIX, and the futures curve have also been not only impacted by the retracement in the spot price moving higher in the indexes and the implied vol of the options moving lower, but that Skew component has a big impact on that as well. So it's amazing how fast we went from that peak to trough in vol I know the equity markets were rolled over a bit too, but I was really surprised, and I tabled a few people out there just to see if there was any massive trades that went through that I missed, but it was just it seemed like it was pretty orderly overall. It wasn't no big massive put sellers that came into the market. I know last week there was some big put buyers, some at the monies late in the week, and that didn't seem to obviously without breaking through those lows, I don't know what they did with those in the end, but it was, that's been pretty interesting to me from the vol world. But yeah, I don't know. It's been pretty interesting with all the dynamics going on in the world right now. I'm just, I know earnings have been generally pretty good, and some of the outlook on economic numbers has been good, but this whole there's just so many things out there to me still that it's just surprised to see such a quick reversal in the volatility levels.
Yeah, you mentioned Skew has kind of been a talking point on us here on the show for the last couple of weeks. The Skew index kind of dropping down to about 133 last week. We had an interesting data point coming out of Susquehanna. We debated a little bit on the show last week about when the Skew index drops more than 10%. Usually that at least according to their data, that had some upside potential for the market, was a strong indicator for upside there. Skew index back up about 10 points this week, listeners. It was about a 133 on the show last week, 143 and change, and almost 144 on the show this week. So again, my views on the Skew index overall. But Tom, sounds like you've been paying attention to the Skew a little bit more these days as well. What are your thoughts on this evolution of the Skew index? Are you a buyer that the Skew index is perhaps a good leading indicator for movement in the S? And what do you think about this sudden, quote unquote, resurgence out there in the Skew, sir?
Well, I think, any index or any kind of metric it's just really how you use it and how you model it. And I'm a big believer in, if you look back on any technicals, or you can kind of back solve data to anything you want. So I did not see the Susquehanna research. I did not see I missed the show when you talked about it. I apologize. But yeah, any of these indicators like this, whether it's a Skew index, whether it's there's a CSFB one that's out there. There's there's my own proprietary, whatever people look at. There's a lot of people look at the 25 delta risk reversal divided by at the money vol. There's a ton of different ways to look at Skew and measure it, but so depending on your time frame and how you build a model around that data and you back test it, which I'm not doing that with the Skew index at all, but you could make a case for it being an indicator. Typically it really just depends on the market environment and the regime you're in. Sometimes when you hit highs, Skew goes bid because everybody comes in hedging on market highs. This latest round, I feel like a little bit that's coming back, but and on market lows, a lot of times when vol explodes, you get a lot of people unwinding their downsides, which puts a lot of dampering on the Skew. So, so it's I think that's kind of what I can say on that.
Mr. Rock Lobster, same question for you. You weren't on the show with us last week either, so we have seen a little bit of a flux in the Skew out there. It was bid to high heaven. When you were on a couple of weeks ago, it was pretty much at the apex that we've seen in quite some time. It came off a little bit in the interim on last week's show, and now, of course, kind of roaring back to life. Again, my thoughts on the Skew index, but what are your thoughts in general on this evolution of the Skew we're seeing out there? What do you think is causing it? B, are you on board with this notion of, the ebb and flow of the Skew index being a good leading indicator for the S&P? And then C, after all of that, what's been lighting up your tape in the vol landscape, sir? A lot to unpack there.
Oh my gosh, so many things. So yeah, I think the SIBO Skew index it has a put and a call component. I'm pretty sure anyway. So I think the biggest problem has been like, okay, where are those puts trading relative to where the calls are trading? So you're an SPX trader, so there's independent Skew. So right now it's definitely coming in though from where it was, right? It was pretty high, and again, it is an indicator of, all right, well, what where are traders trying to buy their options? And I have and I look at downside Skew as well as a function of the vol that we're at, and those numbers are still fairly expensive, but not as expensive as they were. just FYI. So I think people are paying a little less, and I think the hardest reason is just if you think about it, I didn't know that like a 5-point-something% inflation rate was good news. So we're still in this what I just find bizarro land of bad economic news means the Fed is going to keep just holding the market's hand. Just never. Like I would back in the old days, okay, companies made money, and then we had earnings growth, and then bad economic outlook, and stocks would go down. Now bad economic outlook, and it's like, how much can the Fed spend? So, that is not over yet. But at least from as far as the bid for that downside put it's still there. It just isn't as big as it was. And because VIX is still 16, right? Normally, you're people are kind of happy about market levels, and VIX would be 13, right, or less at this point. So it's still there. Mark was looking at it today, but it's not as bid as it was even at the beginning of this week. So now it is possible that so puts are come in a little bit and calls maintain their vol. That's what I noticed yesterday on the rally. That call, at least the near the money calls maintained a bid for vol, and there was a decline in what I would call those skewy puts. So today, that's all the vol now is just coming in just a little bit. So I think it's kind of, if I think about it, it's like you were a trader, right? It kind of stair steps down, right? Like vol takes the elevator up and the escalator down, and the market is just it's ratcheting the vol down a little bit. Okay, so it's going to start with the most expensive options generally, which would be the downside puts. And then eventually that will start to filter in the call if we don't have these 1.5% moves up, right? So that's a 24 vol. So how low can vol go when it's already like 15 or 14% at the money and you have a 1.5% move? So it's kind of taking like that sort of, I don't know, let's see, I'm trying to think of the right word, but it's escaping me ever since I had this COVID. My brain doesn't work anymore. But the stair step down approach, the incremental approach for vol coming in. And I think that's what we're seeing. And I think that's what we're seeing right now. So as I look at, let's say, at the money vol today, so if you look at the money vol today with our little rally, is in the November cycle, in the Nov 19, the at the money vol today is going up a little bit, right? So you have a little bit of curve creep. So the new at the money vols, right? They're not coming in from where they were the day before. So the curve is maintaining on the upside, and it's just giving it away a little bit on the downside. So for listeners, the way I check this is I go, what's the new at the money vol? Is it the same as yesterday? Well, what's the old at the money vol that's starting to decline a little bit? So if you go down, 25, 26 points, you're looking at, let's say, 46.40, and you take a little look there at where vol was, and you're like, is there any bit of a decline there in volatility? So you can kind of figure out where VIX is coming from. So yesterday that vol strike was 1383. Today it is 1309. So what's happening is vol is starting to come in on the downside, but it's now holding up a little bit on the upside, or at least at the money. And that's what happened yesterday, and it's happening again today. Generally, when I look at that number, that's a solid drop in the skew. If you ever traded in the SPX, you remember what that felt like, especially if you were on the wrong side of the skew collapse. So anyway, that does lead, I think, to lower VIX. So at least as of right now, it wouldn't surprise me if we saw a new low next week for VIX, possibly as low as 15, and set a COVID low if the trend continues. Because listen, if nobody wants to buy the puts and the liquidity providers feel that they can buy enough calls and kind of backspread that stuff, we're going to see a lower VIX. So like I said, wouldn't surprise me at all to see that lower number next week.
Let's see what we're seeing here as the show keeps on rolling. Let's keep on rolling into the futures side of the fence. And Tom, I'm glad you're joining us today because I've been breaking down week after week. A lot of growth going on out there in the world of Spike's futures, but you're the man with the plan over there. You're the man who has all the numbers. What's been going on in the land of Spike's futures? How have all these incentive programs you folks have been implementing over there, how are they playing out in the marketplace, sir?
Yeah, thanks, Mark. Yeah, everything's been, Spike's futures have been getting a lot more attention. We've been getting a lot more inquiries, a lot more questions, interests, inquiries in a good way. Let me rephrase that. So volume in September was like 157,000 contracts, which is that average daily volume was around 7,500. And that compares to August of around 3,500. And October is starting out very well. We've, average daily volume this month so far is around a little over 11,000. And we had another record day this past on the 12th, which was 20,800 in a day. So it's feeling pretty good. We've been the incentive program is doing probably exceeding a little bit of our expectations, and it's we've been very happy with the results and all the participants that are involved in it. They've all been great, and so that's on the future side. It's been really just going well overall, and with that MJEX where the futures are launched, where they trade from, they're access to the CME Globex platform, but they're traded on MJEX. The Minneapolis Grain Exchange, they had their, September was their fourth highest volume month in futures contracts overall, and Spike's contributing to a lot of that.
Let's get on out now to the land of VIX futures. As you might imagine, that front portion of the curve a wee bit lower than it was this time last week. Coming into showtime, we had the OCC future down about 2.5 points compared to where it was this time last week, and that no future down almost exactly 2 points from where it was this time last week. So a lot of juice coming out of that front portion of the curve. Mr. Rock Lobster, sir, anything surprising you out there as the front portion of the vol term structure getting a little bit less juicy this week, sir?
Well, let's see here. When you look at that, so the way I measure this stuff is how much decay the curve delivers to all of those hungry vol people. So I would say right now, this is the biggest theoretical decay for the futures we've had in probably 5 weeks, at least as far as I can tell. So we have a November future, $4 over cash, roughly right now, which is pretty high, which potentially is disastrous. So right now, on just pure daily decay alone, that could make VXX a 1777 by November expiration. Now, it rarely gets all the way down to that number, but if VIX went down or even stayed the same consistently all the way to, which it never does, but if it would, you would see VXX below 18. So like there's a lot of decay built into the cycle. So we have like a pretty steep curve now that's generally bad for the vol products. But again, like same thing. We're at 16. That's the low generally for the COVID cycle. We have had that pull back in like the flattening a little bit of the downside. So I'm just looking to see if they take, if it just can reduce a little bit again. So but generally, like this type of action is pretty bad for like VXX and UVXY, and you have this fat curve, and they're going to launch those new vol products. What is it? The new XIV and the new SPXY or something like that. Right into the teeth of a huge decay cycle. So I know we'll have a lot to talk about when those come back. But anyway, as of right now, and usually what you have is this is a one-day phenomenon just because of the weekend effect. VIX will mark itself back up, but we'll see how active the liquidity providers are going to keep VIX above 16 next week and for how long. To be honest, like looking at the earnings and everything else right now, there doesn't appear, and I think Biden tried to kick, which, I'll give him credit if he should have some truck with the unions, right? You give him a kick to work 24 hours 7 and start getting ships unloaded. So maybe, and that was definitely a positive. So if he could get that going, that's a good thing for everybody, and try to get things as normal or back to normal as possible, as fast as normal. And my old saying, the market likes certainty. So if all those, if they could actually run 24/7, that's going to be a big positive overall, and that's usually bad for volatility.
So what I'm hearing, if I can read between the lines here, sir, is that those VXX puts, those Jan 10 puts that they bought on the show many months ago to spite you, what I'm hearing is that you're thinking those are in danger of being a home run, sir. That's what I'm hearing, if I read between the lines.
I think you got a good shot at actually having those be worth something.
Spiting the rock lobster, the way to fame and fortune on this show, listeners. Let's keep on rolling out here, see what's going on in the land of spikes. Options, get out the ball. Options, spikes, pretty active out here this week. We saw some interesting growth. Again, seems like those incentives out there in the futures paying dividends, not just in tighter markets, more futures volume, but translating into some more options paper as well. Seems like the old four-way, that popular trade, is going up again out there this week. Looks like it went up yesterday. A few thousand contracts going up in the NOV 30-32.5 vertical versus the NOV 18-16 vertical. So if you break down the top positions out here in spikes, let's do a top 5. It's still all dominated by the other multi-leg trades we've seen going up out there. Number 5 is the OCK 30s. Number 4, we have the OCK 23 calls. Number 3, we've got the OCK 32 halves. Number 2, October 26s. And the number 1 spot out there in spikes options this week are the October 23 puts. Looks like that four-way in NOV, not enough to move the needle yet, but it's getting up there. Tom, I know you've been watching the spikes paper with a very close eye over the course of the past few weeks. What's been catching your eye out there, sir?
I think actually he's still dumbfounded by he missed the beach.
He
can't even talk anymore.
He's so dumbfounded by the spikes options. All right, we'll get Mr. Tom back here from some technical issues. I know he's champing at the bit to get going on all of this vol talk. He was sending me notes beforehand about everything going on in the land of spikes options this week. So let's see if we can get him back here really quickly. All right, Mr. Tom, can you hear me now, sir? We'll keep on rolling. We'll come back to spikes options in a little bit once he gets his issues sorted out, because there is some paper to discuss out there in the land of VIX. And VIX options actually doing some paper out there today, listeners. Coming into actually just a few minutes ago, we had VIX just a little bit shy of the 600K level, listeners. 597,000 contracts on the tape already today. That might surprise you, given the fact that we've seen larger moves out there in the broad markets that have driven a lot less volume out there. But today, we're seeing the numbers, nearly 600,000 contracts on the tape. And an ADV, though, surprisingly, outside of today, it hasn't been the busiest of weeks. The ADV has actually dropped almost 30,000 contracts. It's down about 28,000 to 446,000 contracts. Let's see what the top 10 sizable positions are out there in VIX land. Let's see. It cost you 147,000 contracts to break into the top 10 out there in VIX options. That gets you to the NOV 18 puts. By the way, we are holding firm at about 70-30 puts to calls in the top 10 out there, listeners. So read into that what you will. Number 9, 148,000 of the D17 puts, the first and only December in our top 10 size positions in VIX out there right now. Number 8, $1.50, almost exactly, of the NOV 20 calls, our first of 3 calls here in the top 10. In fact, it's a little call strip here. Number 7, 158,000 of the NOV 60 calls. And my old favorites, and number 6, 168,000 of the October 50s. And that's it. We're done with calls. Number 5, 177,000 of the NOV 15 puts. Number 4, 184,000 of the October 16 puts. Number 3, 192,000 of the November 17 puts. Number 2, 207,000 of the October 17 puts. And the number 1 size position out there in VIX options right now, the October 14 puts with about 232,000 contracts. Before I keep on rolling with VIX options, let's try one more time. Let's go back to the MIAX hot seat. Mr. Tom, can you hear me, sir? And if so, what's lighting up your tape in the world of Spikes options this week, sir?
Okay.
There he is. There he is.
I wasn't on mute before. I apologize. I had a little disconnection going on. Spikes options. Thank you for the getting back to me on that. I don't follow specific flows as much. It does seem like similar, trading, similar trades that have been going through the market. But one thing I wanted to highlight is just, I don't know if you haven't taken a look lately, but the bid offer spreads in the first 2 months have been pretty good, pretty tight. We've seen, increased, size on the quotes and tighter quotes. And, part of that's due to, I think, kind of market makers realizing there's more liquidity in the underlying, in the futures. But as well as, we do have an incentive program going on in the options as well for the month of, for the fourth quarter starting in October 1st. So we're pretty happy about that. We're looking for, we think that's going to, help us to make a little bit more of a case for the market in general to be involved in the Spikes options complex. So it's pretty exciting. So yeah, it's and then if you want me to, I'd love to talk about the V Spikes briefly, but I can come back to that later if you want.
Go ahead, dive into it now because I'm scared we might lose you. Our chat is debating right now who has more issues with the mute button, you or the Rock Lobster. It's a hotly contested race out there. So before we lose you again, have at it, sir.
Yeah. Okay. So just like VVIX, that uses the VIX options to price itself, V Spikes uses the Spikes options to price itself, and because the markets had been wider in the past, we really couldn't publish anything because the market, bad information in equals bad information out. So we were waiting for some tighter markets to appear in the marketplace. Now that we have that in those front few months, we can, we're looking to maybe publish the index, be public about the index itself, and but that's coming soon. I don't know any week or month now, but and as you recall, the V Spikes is basically different than VVIX as it uses a kind of what you call a simple variance swap methodology, where it's equally weighting the strikes in the distribution versus where VVIX would be using the typical standard variance swap calculation, which has 1 over strike squared is the weightings. So I will let you get back to the VIX flows and volumes, and thank you.
All right, I like it. For our listeners then, when can we expect good old V Spikes, or as Mr. Meatball calls it, the Viking? When can we expect that in our hot little hands, sir?
I'd like to say before year end, but I never want to, I don't have an official date, but we'll get there.
All right, we're looking forward to it. The more data we can crunch here on the show, the better. Speaking of crunching the data, let's get out to some of that out there in VIX options. And like I said, a pretty active day out there today, nearly 600,000. In fact, in our little sojourn there, I'm sure we've crossed the 600K mark by now. In terms of what's the most active out there, what's driving all this paper in VIX options today, it's the October 16 puts, 113,000 of them already crossing the tape, followed by a distant number 2, less than half, 48,000 of the October 17 puts. Number 3, just 4 contracts under 30K of the October 15 puts. Number 4, we have actually some calls are trading today. The October 19s, 21, almost 22,000 of those. And rounding out the top 5 out there today, most active, we have the Nove 16 puts, 20,600 of those bad boys. Yesterday, we had a similar level of paper, right around 600,000 contracts on the tape. The most active contract yesterday, once again, the Oc 17 puts doing some numbers, 87,000 yesterday, followed by number 2, the October 18 puts, 32,000 of those. Number 3, Nove 17 puts, starting to sound like a broken record, 31,000 of those. Number 4, 23K of the the November 20 puts. And rounding out the top 5 yesterday, going back out to December, the D17 puts. People are just in love with the 17 put strike. They don't care what month it is, 20,000 of those. Wednesday, one of the lighter days of the week, only 359,000 contracts on the tape. The most active contract, such as it was, 38,000 of the October 20s, followed by 21,000 of the October 35s. Number 3, 16, almost 17,000 of the October 18 puts. Number 4, we have the October 30s, 13,000 of those. And rounding out the top 5 on a pretty light day, 12,000 actually of the October 19 puts. Tuesday, also a light day, 370,000 contracts on the tape. The most active contract out there on Tuesday, 58, almost 59,000 of the November 15 puts. Number 2, less than half, 23,000 of the Oct 20 puts. Number 3, 17,000 the October 18 puts. Number 4, here's some of the fun paper we've come to expect these days. 15,000 of the Jan 95s. Yes, the 95 calls. 15,407 to be precise, trading on Tuesday, followed by number 5, the comparatively reasonable Nov 70s, 14,600. So something funky was afoot on the day there on Tuesday. And Monday, even lighter paper, only 292,000 contracts on the tape. You can see now why, outside of yesterday and today, ADV has really come in VIX options. The most active contract on Monday, 53,000 of the October 17 puts, once again, followed by 47,000 of the Oct 18 puts. Got a bit of a broken record here. Number 3, 13,000 of the October 19 puts. Number 4, about 10K of the Nov 50s, 5-0, followed by 9,300 for number 5 of the Jan 70s. So we have Jan 70s trading 9,000 times on Monday, followed on Tuesday by 15,000 of the Jan 95s. Mr. Rock Lobster, A, how many of these Jan 95s did you buy? That sounds right up your alley. And then B, what else was lighting up your tape out there in VIX options this week, sir?
Yes, the Jan. You always pick the most out of the money, most expensive options for me to purchase.
Otherwise, it's not funny. If I ask how many Oct 17 puts, it's not really funny. Jan 95s, it's more humorous.
So what do we notice? This week, a lot of put buying, a lot of VIX put buying. I think fading this whole thing. And today, look at the volume today. Huge put buying. Like all of a sudden, the 16 puts for 20 cents are a thing. And, with VIX trading 20 or 16, they have a reasonable shot at paying. So you want to look at some volume, check that out. So I didn't see a whole lot of upside this week, but mostly downside. So, I mean, I have to say this cycle is definitely a cycle where the upside went to die. Especially with our runs to 28 to 24 that we had. But, I mean, the curve really never came out of shape. Like, it flattened out once, I think, when we traded 28, but you didn't have enough of that, you didn't get that crazy buy-in with the front of vol. It did have a little bit of a pop, but, the vol never really went for the full-out market collapse over the last month, even when things look weak. So I can understand why people are buying puts. There's a reason.
Yeah, you had those brief windows. They were a little bit longer, not this past week, but the week before when we had that brief pop at the beginning of the week. Then you had a day and a half to really get some upside off. That's the longest window we've seen in quite some time. Usually it's a matter of hours, if not less, out there. And you're right. Overall, it hasn't been a resounding tour de force to the upside. Let's see if there's a resounding tour de force in VXX, these products that continue to erode. Like I said, coming into showtime, VXX was at about a 22.5. Let's check really quickly. It's a little higher right now, 22.65 or so. So getting a little bit of juice back. We'll see how long that lasts out here. Still down substantially from where it was this time last week, down about 2.5 points from where it was then. 233,000 contracts on the tape today. So a pretty active day, even though the ADV, like VIX, has ticked down a bit since our last show. It's down to about back below 300K, down to about 293,000. It's down to about 11,000 contracts from where it was this time last week. And in terms of where the action is, what are the size positions in VXX? No surprise, it's 70-30 puts to calls out there. I'm surprised you can find 3 calls in the top 10, quite frankly. Number 10 costs you about almost 14,000 contracts to break into the top 10. That gets you to the D's 30 puts, followed by 14,000 of the D's 30 calls. Number 8, 15K of back to our old friend, the VXX1. 3 puts, 15,000 of those. Number 7, 16,000 of the October 28 calls. These are going the way of the dodo today. Don't seem too likely. Number 6, 16,000 of the Nov 23 puts. Number 5, 17,000 of the October 23 halves. Again, going the way of the dodo today. These are the puts. Number 4, 17,600 of the October 24 puts. Number 3, 18,000 of our second and final VXX1 contract in here, the Jan 12 puts. Number 2, 18,500 of our final call here in the top 10, the OC 40s. And number 1 out there in VXX right now, 24,000, almost exactly, of the October 25 puts. Again, all that's going the way of the dodo today. In terms of the most action today, we're seeing these October 22 half puts. Again, that's the at-the-money strike right now. Not surprising. Doing about 12,000 contracts right now, followed by number 2. Surprise, surprise, 9,000 of the October 22 half calls. Also going the way of the dodo today. Also hovering right around that same strike. Number 3, 7,300 of the October 23 puts. Number 4, 6,000 of the October expiring next week on the 22nd, 22 halves. And rounding out the top 5 in VXX right now, the November 21 puts. Mr. Rock Lobster, anything coming across your tape or the tapes of your crazies in the pit chat this week in VXX, sir?
Well, I think it's a little bit more of the same. Didn't see that huge VXX call buying this week. It was kind of a weird week because we had the VXX bid. I think, what did we trade as high as 20? I want to say 24.70, something like that. Yeah, just hovered around 25. But again, flat for 3 days. So that generally doesn't bring the call buying in. So as much as I want to say there was lots of interesting stuff, there wasn't as much interesting stuff in VXX this week. There was some put buying we saw the last couple of days. But as far as that goes, that's about it. I wish I had more exciting news to tell you. But nothing that stood out in any way. But this is the level where people are going to start to get all in on VXX again, and I mean long, because where it's trading. I believe this is all-time low for the product. This is where it has bounced like a rubber biscuit. I did own some puts coming into today, and I actually sold some today just because. Getting rid of some for some money now is a lot easier than doing it later. But so there is that. So this is, it is making a new low. Generally, when it makes new lows, it does go lower, again, for the reasons I described earlier on some of the downside in SPX that could get things lower. So good earnings. We kind of have this funky confluence where we don't care about inflation, because I guess that means the Fed's not going to be, doesn't have to do their taper thing. Maybe those ships get unloaded, and earnings so far have been pretty good. So those are, that's a recipe, and you're not hearing anything on the giant spending bill anymore, right? So it's not even in the news anymore. So I don't know what. So let's just go with what we see. And that is that's all again. And that's a recipe for a lower volatility.
Those people out there who are seeing these levels in VXX say, I got to buy me some of that. Maybe they should listen to some of our previous shows on this subject, or maybe check out some of my Jan 10 puts, looking better every day out there as we keep on rolling out to a product that's getting even closer to the 10 strike. I don't have any of the 10 puts in this. I probably wish I do now. These are, of course, UVXY here. Coming into Showtime, it was shy of the 18 handle, 1790. Let's see where it's pretty much right around that level, actually ticking up close back to the 18 level again right now. So both of these getting about 1/10 of a point back as the show has progressed, but still down nearly 3 points, about 2.85 points from where it was this time last week. The ADV actually ticking up slightly, up to about 198 this week. So one of the few to buck the trend of giving up some ADV this week. And today looking pretty frothy as well. 160,000 contracts on the tape already out there in UVXY. Before we break down what's lighting it up out there, let's do a quick top 5. Again, the position's a lot smaller here in UVXY, listeners. Number 5, we have the October 20 calls. These are going out next week, so not today. Number 4, we have our pre-split adjusted. Only one in the top 5 here. 8,800 of the Jan 1 puts, UVXY 1. Number 3, 9,500 of the October 19 calls, going the way of the dodo today. Number 2, we have 11,300 of the OCK19 puts, also going the way of the dodo today. And number 1 with a small bullet out there in UVXY this week, about 16,000 of the Jan 75s. Again, this is probably my old friend again who loved to sell the upside in September. It seems like he has gone farther out now up to Jan and getting all the upside juice he can get in UVXY out there. In terms of the action today, it's pretty much what you would expect out there. We're hovering around the 18 strike, so the 18 contracts going away today are leading the dance. 14,300 of the calls, 10,400 of the puts are number 1 and number 2. Number 3, 9,000 of the October expiring next week 20 calls. Number 4, 7,500 of the 18 calls also expiring next week. And rounding out the top 5 today, about 5,000 of the 19 calls going the way of the dodo today. Mr. Rock Lobster, anything coming across your tape out there in the land of UVXY this week, sir?
Besides Mark putting it in our big money flow product, Robinhood product, and it's been one of the most consistent wins for us. Because UVXY goes up, and then you buy some puts, and then it crashes, and you sell the puts. So, besides just, of course, for very selfish reasons, I mean, that's what I look at UVXY. I haven't seen any of that big, none of that big weird paper caught my eye, and it hasn't come across kind of our big money flow type stuff. So it hasn't been enough to get me to look at it any more different than I already do, which is basically it rallies and then look for puts to buy.
There you go. It's a pretty basic formula, but it seems to work in UVXY. Looking really quickly out here, we've had a lot of earnings popping off this week, a lot of financials. We've hit on a bunch of them throughout the shows this week, and I want to get to some of you guys on your Vol voicemail. I'll do a real quick rundown. We talked earlier this week about Domino's Pizza. Pizza Vol was a hot one. They popped off yesterday before the bell. They're at $4.7625 when they announced their earnings. They're pricing in 6%. They delivered 0.8%. Again, if there's some confusion with how these are calculated, these are calculated right immediate post-announcement blush there. So as the ball is coming off, that's what they're capturing here. If you hold them for a longer period throughout the rest of the day or through expiration, you can have a different result, obviously. We're talking about the immediate earnings impact. That's what we're focusing on. Bank of America, they were at 43 and change when they went into the announcement yesterday before the bell as well. They're pricing in 2.8%. They delivered about 2.5%. Walgreens Boots Alliance here, it looked like it only delivered about 0.9%, but we know as the day went on, it actually delivered a lot more out there. So that's one of those ones where the frame of reference can come back to bite you. So we have seen a couple of outperformers, but not many, and certainly maybe not the ones people were expecting and pricing in out there. But I want to keep on rolling. We have a bunch of these tickers hot off the presses from our friends over there at Orats. You can check them out for yourselves, theoptionsinsider.com. Go to that options news and articles tab, and you could research and analyze till your heart's content. Meanwhile, now it's time for us to keep on rolling. It is time to answer your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol voicemail. Really quickly, pay off our question of the week this week. It was a fun one, a fascinating one to watch. In fact, I think a lot of you said it was a fascinating poll, and I agree. We asked you, when did you guys get started trading options? 4 choices: post-pandemic, post-great financial crisis, post-dot-com bust, or you kind of in the old school market maker trading pro category. And post-great financial crisis won with about 44.7%, but right around a third. It dropped a little bit towards the end. It was about 33%, got down to about 30.1% at the end, but almost a third of you have started trading options and indeed listening to our shows since the pandemic. So in the last 18 or so months. That's fascinating. Then, of course, dot-com bust era, about 14.6, and right around 11% of you fall in the market maker / trader category. That was a fascinating one. That one's already in the books now. So if you're listening after the fact, that one's done. Mr. Rock Lobster, we have my boy Luigi in the live chat saying he wants to thank you because his UVXY puts paid off this week. So he's in the Rock Lobster wait till it goes up and then buy puts camp. Seems like it works for him, sir. And let's go really quickly out here to, because we're kind of come up against it. Let's like this handle. This, not a handle, it's his name. Raul Diaz Di Cherio. Hope I'm pronouncing that last part correctly. I went for the Italian pronunciation. Not sure if in Spanish it's a hard or soft C. I'm going to go Di Cherio. It just sounds good. He says, hi, Volatility Views. Well, hello, Raul. He says, I have been listening to your podcast for a while, and one of the strategies I am interested in is related to futures calendar spreads. But I have been unable to find a broker that provides this product with exchange spread margins. I checked a lot, and most of them don't even know what I was talking about. And the ones that offer it have margin requirements for both legs of the spread. Do you have any recommendations? I love your podcast. Great work. You are unique. Thanks, Raul. Well, he says thanks, Raul. I say thanks back to you, Raul. Thank you for taking the time to write in. We've had questions along these lines before about how future spreads in particular are margined. Mr. Tom, you're kind of our resident watching the vol futures over there at MIAX. You guys also own a futures exchange at MJEX, so maybe you have some insight you could share here for Raul in terms of how these spreads are being margined currently, or maybe what he should be looking for out there when he's trying to trade these things.
Yeah, what I would say is, I know for Spikes futures and even VIX futures for that matter, the MJEX.com website, you can find, you can search for the margin information on that. I don't know the exact URL right now, but it is on there, and there are, there's different for volatility futures. I won't speak for other futures, but there's a different margin treatment per maturity, and there's also different margin treatments for spreads, which can be lower. Now, that is at the exchange clearing level. That doesn't mean like your wherever you have your account, they can kind of do whatever they want as far as charging you. But that is, what the exchanges provide is the minimum requirement. So I don't know how big Raul is as a trader, but if you have some, you could potentially, speak with your firm about like, well, this is the exchange margin and this is what's comparing to what you charge. But I know a lot of the retail brokerages from personal experience, they charge a decent margin amounts, which makes sense. And I know some of the, if you're a big trader at a market making firm or some hedge funds, you probably get your margins are probably much less. So it really depends on how much you have in the bank probably, and then where your accounts are held.
Yeah, unfortunately, the vol futures sometimes are treated a little bit differently than the other futures out there. Brokers love to tack fees onto the vol futures out there. Witness what they do over there at IB, for example. But Mr. Rock Lobster, any suggestions here for Raul, who's having problems getting his vol future spreads done, sir, in terms of margin?
Well, I mean, you have to look at how the vol futures trade too. I mean, not many futures can have that front month just blow all apart over the back month. Everybody has to take into account, like it's like spreading VIX options. The call calendars and like the spikes and the VIX and all that look really appetizing, right? Because of contango sometimes and the way that they could trade. They can look very appetizing. Wow, you can buy a call spread for a credit, because we're in backwardation, everything's all messed up, and you're like, wow, it's free money. The problem is that front end of the curve can, let's just say, it can ignite every once in a while. So I think that's why, a lot of that margining is in place to protect investors from themselves. Much like you can't trade, let's say, an index. Sometimes you can't trade the SPX calendars in a qualified money account because people forget when they go in the money, they're going to lose one leg of their trade and they're going to be open on potentially a massive amount. So, there's a reason why these things are, and are they going to charge a lot for them for the more exotic products? Yep. Is it ever going to stop? Probably not. So all I can say is to Raul, you just have to find a way to trade it. And I don't think they provide, you might be able to get relief on some accounts if you buy, let's say, like a junk upside call against your short-term short future. So some firms do, some firms don't. Some don't care, and they're just going to charge you a lot anyway.
Yeah, I was going to say, kind of the only near-term easy way around it, not easy, it's going to cost you some money, is what you just said. Pick up some garbage junk. That's why we sometimes see some of that garbage junk going up in VIX for reasons you're discovering here, Raul. But unfortunately, yeah, the margin scene when it comes to volatility products, it's a contentious one. I've mentioned before, we had a listener a few years back actually attempt to run for Congress, and I do believe he was quite serious. He had the campaign literature and everything set up, and it was the primary focus of his campaign was around IB's VIX futures margin rates. So it was a very esoteric niche campaign, but it is something folks have encountered in the past, and unfortunately you're encountering it for yourself. I wish I had a silver bullet for you, Raul. Go to firm Y and it will be much more favorable margin treatment. I don't have that for you. It's not kind of the way these products are currently margined for some of the reasons we just broke down. But great question. We got more great questions. Unfortunately, we're kind of running up against it as we keep on going into that final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, where we all attempt to wrestle with the future of volatility and usually make fools of ourselves in the process. This is a rare moment where VIX and spikes are kind of hanging out almost exactly where they were at the start of the show. We got VIX pretty much right at about a 16 still, and spikes at about a 15.35 or so right now. That means I was at a 17.67, so I was about 1.67 points away on VIX, even more, unfortunately, on spikes. Mr. Sebastian was way up to the upside last week at about a 20.20, so he was no bueno. By the way, a lot of you hitting us up yesterday when VIX touched 17.5 saying, oh, Jem, who was on the show a couple weeks ago, he hit it precisely out of the park. He said 17.5. You guys didn't listen to the show. He was on the show, 2 weeks ago. He predicted 17.5 for last week, which unfortunately turned out not to be correct. I think it was about a point and change away. And then he actually, if you listen to the show, he predicted vol to turn. He actually did do a 2-week prediction as well. He predicted that after 2 weeks, he thought vol would be 23 or maybe 28. He thought it was going to be much higher this week. So you folks who are all saying, oh, 17.5 bullseye, you were not listening to the show out there. All right, a bunch of other people were prognosticating. Let's see, really quickly run through them. Unlimited was at 19.14. Looks like no joy there. Frank, 18 channel. Options Queen back in a 20 handle. No joy there. Looks like Athena. I'm not sure who this Athena is. Athena is one of the closer, 16. Oh, no, we have Munster at a 15.25. Wow, that's actually pretty close. That's a little close to a tenth. That's 0.12 away on spikes right now, Munster. That's pretty close. You looks like you might be our winner chicken dinner for this week. I will extend it. You're 0.12 away. That's fine. Hit up our producers. We'll see if you have some fun prizes in store for you. That's pretty darn close. I won't make you go to the 0.1 the way the rest of us have to here. All right. So our winners are actually the listener. I love seeing that on the show when the listeners get their prognostication going out here. But now it is time for us to do so. There were no winners last week, so that means we'll let our MIAX hot seat guest go first. That's Mr. Tom this week. Mr. Tom, what are you feeling for this time next week, sir?
Well, God, if you look at the spikes chart, it looks like it's going to zero. But I'm still a little. I'm going to just my guess will be like a 17.05. How's that?
17.05. So you're not buying this protracted downturn. You say we're going to get a little bit more juice in. Mr. Rock Lobster, you always take umbrage when I assign you a spot, so I will allow you to choose. Do you want to go next or last?
I will go next, and I know Tom's going up. I'm going to follow the trend of what the ball's doing, and I'm going to go 15.15.
So almost unched from where, at least from a spikes perspective this time next week, and obviously lower there on VIX. 15.15. All right, so that leaves it to me, 15.15 to 17.05. That's 2 points. And actually, I am not going to go outside of that. I'm actually going to go in between that. I was liking a level earlier. It's kind of been floating around in my head all day today. 16.35, that's what I'm feeling out there. So that's your market, listeners. 15.15 on the dark side, 16.35 on the more accurate side, and 17.05 on the upside. All right, listeners, we ran a little long, but we had a fun one out there today. But don't worry, if you need more in your ear holes and you're a secret club member, just stay tuned. We'll be back in a little less than an hour now to talk all of the crazy madness that's going on in the world of unusual activity. Remember, it's options expiration today, so we'll have some fun trades to pay off there as well on options oddities. But before we get to that, let's go back around the horn. Mr. Tom, if folks are intrigued, maybe they have more questions about the margin on the Spikes futures or any of that kind of stuff, where should they go? What should they do, sir?
Well, if you want information on the margin on the futures, you'd have to go to mjex.com/margins. For Spikes information overall and MIAX, you go to miaxoptions.com/spikes. That'll get you any information you need.
There you go. And Mr. Rocklops, the same question for you, sir. If folks are intrigued, they want to learn more about all the litany of products you folks have. Where should they go? What should they do?
Go on over to optionpit.com, go to memberships, sign up for our goodies, all levels from beginner to advanced, as a lot of our students that are in our pro chat room are basically just they're either trading for a living or retired and trading for a living, investing, doing all that kind of stuff. So if you want to learn how to do it, hop on over to optionpit.com, talk to Ted, 888-TRADE-01. and he will try to fit you with the right product for you.
Isn't that just the answer to all the problems in life? Just talk to Ted over there at optionpits.com. We got to get on out of here. Listeners, as I said, we'll be back for your Secret Club, folks. A little less than an hour now, and then back again on Monday, of course, to kick off the madness nice and early there again with our fun wrestling palooza there on the option block, I should say, all the way through to Friday, another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.